Good morning, folks. My name is Curtis Chandler. I am president at PFL. We hope that everyone had a great weekend. Well, it's officially done, folks. The president has signed the so-called 1.9 trillion COVID relief bill with tremendous pork. And now it's on to infrastructure. I am scared to see what that bill will look like. We hope that you are enjoying our early morning briefing. We are live 7 a.m. Eastern every Monday. If you are viewing this podcast through our reports and are up at 7 a.m. Eastern, please tune in next week live instead. Please like us on LinkedIn and follow us and pass on the good word. We would certainly appreciate it, and you could win a PFL model railcar. We have added 200 more followers so far this quarter. We need 300 more followers this quarter at PFL. And we'll be giving away a lot of rail cars this month. Stay tuned for another podcast later today on how to win. Our quote this week is from Nelson Mandela. Nelson Mandela was a South African anti-apartheid revolutionary political leader who served as the first black president of South Africa from 1994 to 1999. Nelson once said, "It always seems impossible until it is done." We, of course, really like this one, folks. Have you ever worked on an impossible project that finally got completed? It is so gratifying when you are done. Keep up the fight, folks, and we hope your impossible job comes to an end. Whether it's in business or personal in nature, everybody has one. New U.S. jobless claims in the week ending March 6. Initial jobless claims were 72,000, a decrease of 42,000 from the previous week's revised level. Previous week's level was revised up by 9,000 from 745,000 to 754,000. The advanced number for seasonally adjusted insured unemployment during the week ending February 27th was 4,144,000 people, a decrease of 193,000 from the previous week's revised total. The previous week's level was revised up 42,000 from 4,295,000 to 4,337,000. The 4-week rolling average was 4,355,000 people, a decrease of 103,000 from the previous week's revised average. The Dow closed higher on Friday of last week, up 293.05 points, closing out the week at 32,778.64 points, up 1,534.64 points week over week. The S&P 500 closed higher on Friday of last week, up 4 points, closing out the week at 3,943.34 points, up 91.59 points week over week. The Nasdaq closed lower on Friday, bucking the trend of last week, down 78.81 points, closing out the week at 13,319.86 points, up 248.61 points week over week. In overnight trading, Dow futures traded higher and expected to open up this morning 140 points. In oil markets, oil fell for the first week in 2 months, with the rally losing steam. Oil prices are reported as getting too far ahead of themselves and are correcting accordingly. Despite a higher U.S. dollar and Saudi Arabia announcing last week that it would extend the extra 1 million barrel per day cut into April, WTI oil for April delivery declined 41 cents a barrel to settle at 65.61 a barrel on Friday of last week, down 48 cents a barrel week over week. This was the first weekly decline in 8 weeks. Brent crude oil for May delivery also lost 41 cents a barrel on Friday of last week, closing at 69.22 a barrel, down 14 cents a barrel week over week. U.S. commercial crude inventories increased by 13.8 million barrels week over week. At 498.4 million barrels, U.S. crude oil inventories are 6% above the 5-year average for this time of year. Total motor gasoline inventories decreased by 11.9 million barrels week over week and are 6% below the 5-year average for this time of year. Finished gasoline and blending component inventories both decreased last week. Distillate fuels inventories decreased by 5.5 million barrels week over week and are 4% below the 5-year average for this time of year. Propane and propylene inventories were virtually unchanged week over week and are 15% below the 5-year average for this time of year. Total commercial inventories increased by 1.3 million barrels last week. U.S. crude oil refinery inputs averaged 12.3 million barrels per day during the week ending March 5th, which was 2.4 million barrels per day more week over week. Refineries operated at 69% of their operable capacity last week, a far cry from the 84.9% utilization rate per the Texas freeze. But we are getting there, folks. Expect to see an increase in refinery utilization, a drawdown on crude oil, and a replenishment of gasoline and distillates. Gasoline production did increase last week, averaging 9.0 million barrels per day. Distillate fuel production did increase last week as well, averaging 3.7 million barrels per day. U.S. crude imports averaged 5.7 million barrels per day last week, a decrease of 600,000 barrels per day week over week. Over the past 4 weeks, crude oil imports averaged 5.6 million barrels per day, 11.7% less than the same 4-week period last year. Total motor gasoline imports, including both finishing gasoline and gasoline blending components, last week averaged 577,000 barrels per day, and distillate fuel imports averaged 472,000 barrels per day. Oil is higher in overnight trading, and WTI is poised to open at 66.07, up 46 cents per barrel from Friday's close. Total North American rail volumes were up 9.2% year over year in week 9, resulting in year-to-date volumes that are up 2% year over year. 5 of the 11 major AAR traffic categories posted year-over-year increases, with the largest increase coming from intermodal at plus 19.3% and grain at plus 32%. The largest decrease came from chemicals at minus 9.6% and non-metallic minerals at 9.5%. North American rig count is down by 26 rigs week over week. The U.S. was down by one rig week over week. U.S. currently has 402 active rigs. Canada's rig count was down by 25 rigs week over week, and Canada's overall rig count sits at 116 active rigs. Year over year, we are down 449 rigs collectively. A few things we're keeping an eye on. Well, our hats off to SARS. PFL attended SARS Rail Conference in San Antonio last week. SARS was the last conference we attended pre-COVID, and the first one we attended exactly a year later. So it was sentimental in a way, and we were a big sponsor and promoter of the event on the back of it. Attendance was around 300, a far cry from the 700 people that attended a year prior in Galveston, but restrictions and social distancing, Texas style, were in place. We were thrilled to meet with many colleagues that we have not seen in a while. The theme of the conference was Track to Recovery, and participants at the conference were upbeat, looking to do deals. Speakers from KCS, Macomb School of Business, NS, and others did a great job. It was a great speaker lineup. The keynote address was from James Carnes from C and spoke on regaining and retaining in a COVID world. If you'd like to discuss SARS, please give us a call at your convenience, 239-390-2885. We are watching Brookfield. Brookfield Infrastructure, who recently bought G&W, takes a run at Inter Pipeline in a hostile takeover. Brookfield said on Thursday of last week it is committed to its $7.1 billion, 5.6 U.S. hostile takeover of Inter Pipeline, despite the pipeline's company board running down the bid. Brookfield said that its offer is the best interest of the company's shareholders. Inter Pipeline on Tuesday asked its shareholders to reject the offer, saying it significantly undervalues the oil and gas transportation company. Inter Pipeline expects a superior offer or other alternatives to emerge, and says looking for a partner for its $4 billion Canadian Heartland petrochemical complex in Alberta, due to start operating in early 2022. The Heartland petrochemical complex will consume 22,000 barrels per day of locally sourced propane to produce 525 kilotons per annum of propylene, a high-value, easy transportable plastic used in manufacturing of a wide range of finished products. According to Inter Pipeline, the Heartland complex will materially diversify and strengthen Inter Pipeline's processing business, while creating an attractive new market for Alberta propane. Construction is well underway at the Strathcona County near Inter Pipeline's existing red water fractionator. Petroleum by Rail. The 4-week rolling average of petroleum carloads carried on 6 of North America's railroads rose to 24,448, up from 24,221 week over week. Weather conditions improved. CP shipments rose by 15.2%. CN volumes were up by 2.4%, and U.S. was mainly up, and the largest percentage increase was the NS by 22.3%. We are watching Enbridge Line 5. Some propane suppliers relying on Enbridge Line 5 are transitioning to railroad cars to get their products in anticipation of the oil pipeline shutting down in May. Hope may be for LPG prices. Enbridge says that the aging pipeline is safe, but opponents have been arguing for years that the risk posed by an oil spill where Lake Michigan and Huron Connect is too great. Enbridge pushed back on Whitmore's order, filing a lawsuit and saying it won't comply with the shutdown order. As the legal battle continues, the state task force continues to identify areas where consumer production can strengthen and energy efficiencies enhanced, including brownfield sites for propane storage, increasing storage capacity, and offering rail development funding available to propane providers. The governor really wants this pipeline shut down. It seems to be her little pet project. Stay tuned. We are watching changing trends in production. See PFL's rail report for further details. That's all for this week's podcast. We hope that you have a great, safe week. We hope to see you next Monday. PFL has been extremely active in storage and all rail-related activities. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any matter that you may have at 239-390-2885.